But he literally told me that the banks in Canada operate like the cartel that are controlled by the government. Like literally,
that's a great way of putting it.
That's literally.
Yeah. Explain that.
I'm not gonna. I don't want to butcher it because this isn't. It's above my head. But he basically said the government dictates what the banks do and the banks follow. Yeah, here we go. Okay.
All right, what are we talking about?
Market update. I want to hear it from a realtor. Obviously, it's local to Windsor. Yeah, mics are working. Obviously, you're local to Windsor, so let's hear. Also, guys, let me know if you can hear us okay. I want to know if you guys can hear okay as well.
Yeah, should you put the mic this way?
What?
I don't
right
know,
here?
whatever. Yeah,
like this right here?
Yeah.
Yeah,
I just a thought, but
yeah.
Yeah, we don't have the market stats for Windsor this particular month yet. They should be coming out soon, but just anecdotally, it's no supply and plenty of buyers, and the interest rate hike has been completely absorbed, it seems, and just the fundamentals are playing out. That's what I keep telling people.
So okay, but what's different? What is different from the last time we sat here? A week ago, 2 weeks ago, obviously things are moving really quick. Like, what are you seeing that's different in the market?
Yeah, like
from
the previous conversation.
Yeah, like from a home buyer perspective, and I don't mean necessarily like let's take it from two angles. Let's take it from the angle of a home buyer, seller, as well as investor, because you work with really all three, right?
Yeah. So it's a seller's market. From a home buyer's perspective, there's FOMO. There's definitely fear of missing out on
like what are they thinking right now?
They're thinking sentiment? Like there's so few good listings, right? Depending on your price range, right? A good listing at $400K is different than a good listing at $1 million. So the properties that stand out, there's only so many of them. And when one of my buyers, for instance, sees a property that they really want, our first thought is, shoot, there's going to be multiple offers here. There's going to be a lot of people that want this property.
Is there multiple offers?
Yes, every time.
Like how? Like what are we talking here in Windsor right now?
I don't 4 to 10.
Really?
4 to 10, depending on like the price range and stuff like that.
That's crazy still.
If it's underlisted, which most properties are. So yeah, it's and then people are like, well, what's the problem? Why are there multiple offers? Why this? Why that? Is it because the properties are being underlisted? Is it because they're trying to blame whatever the case is? But in reality, it's because there's only one good property or two good properties or not enough houses to meet the demand of whatever particular segment that we're looking in. It's just the straight fundamentals that we always talk about.
Yeah.
Now, the things we can't predict are what's going to happen on June 7th with the rate hike. Yeah. Don't know.
Interesting.
But regardless of what happens with that rate hike, it's not going to fix the problem.
So... Yeah, and the rate hike's coming when? Next week?
Well, the announcement. We don't know if it's going to be a hike or not. But
what do you think?
I'm calling it like 50-50. I don't know. And the reason why, like a lot of people are like, oh, they're going to raise rates for sure. I can see them doing it because the inflation prints are still high.
Yeah.
But if you saw my post last time they announced inflation, what they said was a big portion of the inflation print was mortgage interest payments.
Did they said that?
Yeah,
they stated it. Yeah.
Well, I don't know if they stated it, but that's the statistic, right? Like it does whatever. Like it was, if you took
something
out
like 0.8% of inflation was
a pretty big chunk
mortgage interest. Yeah,
a pretty big chunk. So if you took out mortgage interest, so if they raise rates again, it's going to make that inflation print even worse.
Yeah.
That's why I'm like, well, it's 50-50.
Yeah.
That they're going to do it.
Yeah.
So we'll see, but I keep going back to that. We keep saying the same thing. Even if they do, even if it causes home prices to come down a bit, it still doesn't fix the problem.
Yeah.
Which is
the supply and demand. Yeah.
That's it. So like I don't know what to tell people other than that. Actually, we always argue that it's going to make it worse.
Yeah, maybe.
And it's going to make it worse because
nobody's going to sell.
Nobody's going to sell and nobody's going to build.
Yeah,
builders are going to pause.
Yeah.
Like you have your Terrion. Like you could build right now.
Yeah.
You have properties on double lots.
Yeah.
Why aren't you building?
So construction. So this is also something that might be a little bit interesting for people to understand here. Lumber's come down significantly to pre-pandemic levels. Lumber, not everything else, not even close. Everything else is still considerably higher.
Like what? Labor,
concrete's come down a little bit, but not nearly a little bit. Metal, plastic, even like I've seen certain things. I had to get some fittings for even my pool. The fucking fittings or like the junctions and stuff like that to connect hoses are like 4 times the cost.
Insane.
Like just dumb shit like that, plastic tubing that at a, for example, a job site. I was talking to a couple contractors at a job site. They would just give it away. They would just like throw it out, give it away. They'd let the job site little kids like, you know, come in and pick up their scraps, and
now they're like hot commodities.
Yeah, now they're first of all billing people, and then they're also bringing it back to the shop because it's just too expensive now.
But here's what people don't. Most people only think one layer deep. What they don't see, well, why are those so expensive? The price of shipping has come down. This, not whatever. Yeah. Well, all the input costs are way up. Hydro, labor, rent for if you own a business or whatever the case is, taxes, property taxes, insurance, all these back end soft costs that we call them sometimes. Yeah, those are never coming down again. Yeah, like you think hydro costs are going to come down ever again? Yeah. Like you think some things never come down after inflation hits them. Yeah. I would argue even most things. For sure. And those most things are things that are not easily mass produced. Yeah. Those don't come down. Yeah. The markets will probably never balance. Those they might come down a bit, but they're not coming down to pre-pandemic levels is our point. It's
the same shit with gas. Yeah. They go up to a certain level, and then it's 2 steps forward, 2-3 steps forwards, 1 step back. Yeah. It's all the time. This is exactly what's happening.
During the 1 step back, people are like, "Oh, this is like," we're on Twitter. What are people saying about the lumber prices now?
That housing is going to follow.
Yeah, oh, housing's going to zero now. This is always leading to a housing price decline when lumber costs come down. Maybe a little bit, but it ain't coming down to pre-pandemic levels, which is what people are predicting.
Like I said, I have my Terry on or whatever you call it now, HCRA, whatever, building license. So I talk to a lot of developers and construction guys, tradesmen, like that kind of stuff. And the last guy I talked to was literally I had to get a HVAC guy out to my house and then another HVAC guy out to the golf course. And he's just shocked at, okay, I'll give you an example. A rooftop, like we're talking commercial. Pre-pandemic, I used to be able to get a rooftop unit for $9,000. Now they're $14,000-$15,000.
Was that 50%, 60% increase?
That's insane, man.
Yeah.
Like $5,000-$6,000 increase in just a rooftop. You don't, and that now that's just commercial. I haven't priced out a residential AC unit, but you don't think that it's going to be that much different?
10 or 15, it's going to be up. Yeah,
for sure.
Now, what happens when you're, as a landlord or a business owner, what happens when your costs go up?
Of course. Yeah, like, dude, I'm replacing hot water heaters right now, and they're up. They're up like an insane amount. And the labor to install that shit, because you can't just have I can't have my maintenance guy install it. I have to get a licensed, HVAC guy to install it because I got to disconnect the gas and all that bullshit, right? So for me to even install a fucking simple hot water heater is insane.
Yeah, and like building code is getting stricter. There's the green energy push. Like all this stuff is inflationary, right? Yeah. The green energy and new building code tied to green energy and energy efficiency and this insulation and this. You got to have tankless water heaters now, and all these things are input costs that developers and builders or business owners cannot just absorb. Yeah. You have to pass it on to the end user, which is why building's not getting more. It's not getting cheaper. Rents aren't getting cheaper. That's why rents are skyrocketing, and that's why product prices are going up as well. Yeah. So, I guess if we had to sum it up,
what are sellers like? What's the sentiment from sellers right now?
Sellers know that the market's strong, right? If you have a good agent, they're going to tell you what's going on. And then sellers typically have slightly unrealistically high expectations of their personal property anyways.
So what are you, just the way it is. Are you seeing them come down in their expectations a little bit, given the fact that, the market has changed, rates are up? I'm under the impression right now that we're off from the peak within recent history, right?
Off of the peak prices?
Yeah, peak prices. Yeah, we're off. How much would you say that we're off peak prices?
I mean, it was $150,000 on average. Now it's maybe 75.
Maybe percentage-wise.
So it was like 20-25, and now we're probably cut that in half, 12, 13, right, eh? I would argue. Okay. And it's on the rise as well. And the reason for that is raising rates is an artificial way to lower prices of something.
Sure.
But in the end, what plays out?
Yeah,
supply and demand.
Yeah.
The only way to fix the problem is to build massive amounts of houses affordably.
Yeah.
Anybody building a house now, it's not going to be affordable for the reasons that we just talked about.
Yeah.
So, seller sentiment is they know it's a seller's market. They might have slightly unrealistic expectations, but people are generally a little bit in tune with the market. Hey, my neighbor's property sold for this, or hey, you know, this, whatever. So
what are they thinking in terms of, okay, they sell their property now, where are they going to go?
That's the hard part,
right?
Yeah.
What are you seeing them? What's the next step for them after they sell their home? What are you typically seeing them shift to? Not necessarily what type of house, but are they trying to upgrade? Are they downgrading? Are they moving out? What's happening here?
Yeah, you'd be upgrading.
They're upgrading.
Yeah.
The majority of your clients are upgrading.
Yes.
Okay.
Because the market's strong.
And they feel like they can afford it even with the higher rates.
Well, when the market's up, when I bought a raised ranch for $200K 15 years ago, and now it's $650, $700, I now have $600,000 to go plop down on a $900K mortgage, and then it becomes affordable again.
Yeah.
Like in that period of time, you built a lot of equity, almost everybody.
Yeah.
And then you also, like, you've probably gotten raise after raise after raise. It doesn't keep up with inflation, but you're still making more money.
Yeah.
And you have dual income and whatever the case is, and maybe a little bit more savings.
Yeah.
Like, yeah, the rates are up, but there are so many counter forces that people don't look at.
Yeah.
And the big one is the equity gains. Unless you bought in the past 2 years at that peak of the market, if you bought any time before that 2 year window, which is the vast majority of people, you have hundreds of thousands of dollars in equity.
Yeah.
In anything, right? So huge chunks of cash, and people wouldn't buy them. Like, you're going to the bank and you're getting qualified at 7%, 7.25%.
That's so crazy.
So they must be affordable.
Yeah.
Their income must support it. Like,
they're
we have
affordable enough.
I mean, the Canadian banks are relative on a global scale. We're very risk averse.
Yeah.
As a country, we have very strict regulation. Yeah, there's some loopholes and maybe there's some fraud out here and there, but people think like there's mass fraud. It's a 0.5%.
Yeah.
Maybe.
You know what's crazy? I had a conversation. I put this up on Twitter the other day. I had a conversation with a pretty a pretty high level executive economist from one of the bigger banks. I don't want to name the banks or whatever, but because I work with this guy and. Or I talk to him a lot. I don't want him to not discuss things with me. But he literally told me that the banks in Canada operate like the cartel that are controlled by the government. Like, literally.
That's a great way of putting it.
That's literally...
Yeah. Explain that.
I'm not going to... I don't want to butcher it because this isn't... It's above my head. But he basically said the government dictates what the banks do and the banks follow. And that's it.
And this is what people need to understand. The banks and the government are essentially one.
Yeah.
People think the banks are like, oh, the banks are going to fail. They're going to go blah, blah, blah. You think the government and the banks aren't?
Yeah.
They're the same. The government wants an oligopoly. That's so much more power, right?
Yeah.
When you have, how many banks are in the U.S.? Hundreds and hundreds?
Yeah.
You have no control over those
thousands.
regional banks. Yeah, thousands probably. You can't control the little regional bank in Florida like as well as you can control the
something else that he mentioned that was really interesting too is as an economist. So he said that so his job is to put together forecasts for the bank, and he said, don't quote me here, but I put basically the quote on Twitter, but he basically said, if you think that you're able to predict anything, you're a fucking fool. And he said if he's learned anything over the last few years is that the market is completely unpredictable. It is what it is.
Yeah, I mean, it's so...
He's like, we could put our forecasts out there, but the only thing that our forecasts are based off of is the information that we have at hand, basically, and we're taking a shot in the dark with our best educated guess. And he said he does base it, off of historical, factual evidence of what's happened in the past. But the problem, what he said is, a lot of times when like, especially now, is these times are simply unprecedented. So how do you actually base things off of historical factual evidence when this type of scenario has never really happened before? Yeah, and then he also mentioned that the problem nowadays is that you get these black swan events thrown into the mix, and it makes it completely unpredictable just when you think you have a grasp on things.
Yeah, so like people are looking back to previous times when it wasn't a global economy, number one. We didn't have the internet, for instance. we didn't have COVID or ultra low rates. Like
I'm gonna interrupt you for real quick, but look at this. Look at this for example. You just mentioned the internet, right? I'm pretty sure, again, don't quote me or whatever, but I'm pretty sure the whole sell-off for SVB was because of the whole, it going viral on Twitter and other
good point, yeah.
and other social media outlets. I don't know exactly, but that's what I did. I saw a couple articles saying that like Twitter had a big hand in SVB actually going under, and we touched on that too. The economist that I was speaking with, he actually mentioned that he touched on it. He's like, yeah, were they mismanaged? Yes. Were they in trouble? Yes. But if it wasn't for that, would they have failed? He said probably not.
That's a good point.
Right? You're feeding this snowball, and it's rolling down the hill so fast, getting so big, it just ends up becoming unstoppable. Yeah. And that doesn't happen without the internet.
Yeah. And to summarize, people were pulling their money out of SVP because they were reading stories on Twitter and whatever else, and they got scared and started pulling their money out too quickly for the bank to deal with it.
Exactly.
Right, and if it wasn't for the internet, it probably wouldn't have happened, and they would have been able to digest.
Exactly. Now I know people are going to probably fact check this kind of shit, and
I mean, there's that's part of the story. That's a significant part of the story.
That's what I've heard, and go right ahead. I'd love to learn more about it, but whatever it is.
People also believe that they can predict black swan events.
Yeah. Nobody has been able to.
Which then makes it not a black swan.
Exactly.
Idiot.
Yeah, exactly. Okay, so what's the sentiment of investors in the market?
I mean, people want to buy. People have money.
Is that right? So when did things start to shift? Was it when the Bank of Canada paused rates? Is that what ended up happening?
Yes.
Okay, so that shifted. Is it getting stronger at this point moving on? Or as we start hearing more of this fear and confusion about what's going on, maybe another rate hike, this and that, are you seeing more interest in investing? What's the sentiment from these guys?
Great question. This is how I put it. There's different levels of investors, right? The more experienced of an investor you are, the more calm you are, the more whatever, the more likely you are to pick up the phone right now and recognize this as an opportunity.
Yeah.
But the lower level investors, the people that are they just want to get into the game, whatever, they're probably on the sidelines, right? When the market was hot, my phone would ring 10 times a day from random people that I didn't know looking to invest. Now those were the beginners. Those were the people that have never done it before. Now my phone only rings from like, oh yeah, this guy, this guy's bought 7 properties.
Got it.
It's starting to ring with those people.
Yeah.
Now the problem is there's no deals.
Yeah. So from my perspective, obviously running Coachville Capital, an investment vehicle for Canadians to invest in U.S. real estate, we just went to market with a deal down in Melbourne, Florida. We launched a fund. We closed it within days of it opening up. It was a group of guys came in with big money, and they wanted to take down the entire deal. They actually want to buy me out of the whole thing. And we did get, in between of launching that, we did get a lot of people that I even got a call from my mom. Like she actually saw because she's an investor in Bayview Palms, our previous fund, and she was like, hey, I wanted to get in on this, but I saw that it closed. And I was like, yeah. She's like, well, can you let me know next time you have one? And I'm like, yeah, I have one coming up. I'm going to syndicate out. I own a large part of Canton Manor, the Michigan building that I first purchased. I own a large stake in that. So I'm going to start syndicating out my equity in that property. So I'm going to have that coming up very soon. But, even my mom is like, so where I'm going with this is she's under the impression, she had a lot of mutual funds. She had stocks, this and that. She ended up pulling out a good portion of that. Not that much, but a decent portion. I think she pulled out like a couple $100,000, and she put it into something else. But she also invested like $50,000 into Bayview Palms because she's like, I'm getting killed. And this was now again, this was during the pandemic and during COVID. But I'm like, but she sees what I've been doing, and I didn't build my wealth from the stock market.
Mutual funds.
Exactly. It doesn't. You know what I'm saying? I'm like, Mom, what are you getting in the mutual funds at that time? She's like, I don't know, 3.5%.
And I'm like, management fees. And all this shit.
I'm like, this doesn't work. This is what you have to do this. And she's like, yeah, like I'm seeing the returns. She's making more on the cash on cash return than she would be having her money in mutual funds alone. That's not including principal pay down,
guaranteed,
appreciation eventually in the property. So at the end of the day, I'm getting a lot of people contacting me and expressing interest now in these style of investments being, especially, number one, U.S. real estate, because people find that very appealing because investing in Canada just doesn't work anymore. And I'm getting a lot of people realizing, oh, wait a minute, I've had my money with banks and with financial investors and this and that for a long time, and I've never really made a whole lot of headwind with it. I've never really gotten that far ahead. And now I'm not saying that you can't make big money in stocks. I know people are always like, well, you can do this and you can do this option and you can do this call and you can do all this fucking fancy shit. I'm not talking about, my mom's not doing that kind of shit. The people that
most people aren't.
No, most people are not. Most people are exactly like my mom. They want to give their money to somebody to manage it and then make a good return over and above inflation to be ahead of the curve. That's the
I don't think it's people. Yeah.
Go ahead.
People aren't even like, oh, I want to be over inflation. They just want to see a number of 5 or 6 or 7%. They just want to see it not lose money. Most
exactly.
people,
yeah. So I think for the majority of those people, they're starting to recognize how they're starting to recognize, even though there's so much negativity and fear and confusion with respect to interest rates in the real estate market, they're starting to realize the fact that, wait a minute, what the fuck are my other options here? Like, seriously, what are my other options? And I heard some people talking, I posted something on Twitter and I was like, well, so given the market sentiment right now, given all the options, what do you do with your money? Like right now, what do you do with your money? And the majority of people were like, I keep it in money markets or whatever until what they are so certain is going to happen, and then they're going to take, in terms of a crash or recession, then they're going to take all that capital and they're just going to like buy everything that's on sale. And I'm like, guys, like, it just doesn't work like that.
You ain't doing any of that.
It just doesn't work like that. If you're not a buyer now, listen, at the end of the day, if you're not a buyer right now and you can't see through this noise, you won't be a buyer when shit is really scary. Like when shit is really scary, forget it. You're not. You're gonna run.
This is only a little bit scary.
Exactly. This is not that scary right now. So.
Well, what's weird to me as well is somehow people think that buying stock in these companies is safer than real estate.
Yeah.
And it's insane to me because people don't really understand what they're doing.
And you were bullish on stocks, like big time. I remember that.
100%. Now, here's a couple things people don't think about. Let's say I buy shares of Apple.
Yeah.
Okay. Apple basically prints more shares every year. They pay their employees in shares. They issue more stock all the time. They're diluting their shareholders all the time. Now, I'm not saying Apple's a bad investment or anything, but a lot of companies are very dilutive. Oh, we need to raise $1 billion. We sell $1 billion worth of shares to the market. I owned one of 100 shares. Now I own one of 1,000 shares. Right? My ownership has gone. So that's one thing. Number two, you have no control over the property. Number three, you're only getting one layer of which is appreciation typically, right? The dividend of Apple stock is like 0.08 or something. Like it's not even worth talking about. So you're not getting like principal pay down, appreciation, and dividends, the cash flow.
Yeah.
Now, how can you sit here and argue that the stock market in general is better than real estate? I don't understand. Intelligently bought real estate.
I have yet to find a decent deal, not even a good deal, a decent deal that didn't return 20% total ROI or an annualized rate of return. I still have not been able to. And
I agree, man.
If it doesn't return at minimum that, I don't even look at it.
Yeah. Now, how do you get? Let's tell people, how do you get to that 20% estimate, for instance? Right. Give us a duplex. Even doesn't matter.
You get basically we're talking like even minimum 5% cash on cash return. You have 5%. Call it appreciation over the year over year. And then you have principal pay down.
Yeah. Now let's remember that 5% appreciation it's 5-to-1 leverage. Yeah. Mm-hmm. So we don't even. That's why, right? Yeah, we don't even use 5%. We use 2%.
Yeah, 2%.
So 5 times 2, that's there. Okay, so you get 10% a year in appreciation on average, not every year, but on average. You've got 5% cash on cash return, but And then you've got the principal pay down of whatever, $700-800 a month a lot of times on a whatever investment. Like the percentages are very high. Yeah. And you're right. For any deal that I've ever considered buying, when I plug those numbers in at very conservative estimates, I'm getting 20+%.
It's hard not to.
Almost every time.
Yeah.
And what's actually happening, because real estate's so limited and we buy in proper markets and markets that are expanding and growing in population and jobs, it ends up being 4% appreciation, leverage 5 to 1. Well, there's 20% just in appreciation on your cash.
Yeah.
So it ends up being like exponentially more.
Yeah.
You just can't do that in the stock market or gold or bonds.
Yeah. So what's the argument for that one guy when he was mentioning, well, you can do that if you exercise certain calls or options or whatever, where you could actually leverage stocks and
you could sell you could buy call options, which says if this stock. It's the right to buy a share. Like I have the right to buy Apple stock at $100.
Yeah.
Within the next 6 months. Now let's say the Apple shares go to 120. Well, I have the right to buy the shares for 100. So I just made 20%. Whatever. Yeah. I'm using rough numbers. Now, if you actually owned the shares, the percentage increase of Apple would have only been 3 or 4%.
Yeah.
But because you have it leveraged, it's kind of a higher percentage return.
Yeah.
But here's the thing. If Apple shares go to 90, your option is worthless.
Yeah.
It's you have the right to buy them for 100, but I could buy them on the market for 90.
Yeah.
So you're actually risking everything when you do that. When you use leverage in the stock market, in general, you're actually risking your whole investment.
Yeah.
Whereas in real estate, of course, you own the property.
Yeah.
You own the waterfront property, or you own the property in the growing city, or you own the property where there's NASA and Boeing right down the street.
Yeah.
And that will never go away, and people always need a place to live. So that's the difference. Yeah. And most people, like you said, aren't advanced stock investors. They don't have time to do that.
Yeah.
They don't feel comfortable doing that. No. And they don't want to learn how to do that. And they don't want to risk all of their invested capital.
Exactly.
But yet somehow the average person, the middle-class wage earner, average person, believes that the stock market is safe and real estate is risky.
And it
couldn't be further from the truth.
Absolutely manipulated. It makes me sick.
It's because the big banks have a vested, the media, the big banks and the government have a vested interest in guiding people towards...
For sure, of course.
Giving the banks their money.
Yeah.
And investing with the banker that just got out of...
There almost even be an argument for the banks. I remember watching something from Grant Cardone and him mentioning that the American dream of owning your own home was created by the banks in order to loan people money. But I'm like, well, it doesn't really fucking matter because it works.
Yeah,
it's irrelevant.
Yeah, it doesn't matter at all.
It doesn't matter. Yeah. Like for your principal residence, maybe that's because a principal residence is not an asset. I know people are going to argue that, but it's not. I don't consider it an asset.
It's better than renting, but it's not an asset.
Exactly. Unless it pays me monthly to own it, then
it's not an asset. Liability.
It's a liability.
Simply put.
Yeah.
Takes cash out of your pocket every month.
Yeah. And assets, I feel, are at the point in time when you earn or when you realize your not income, but when you realize a gain from an asset perspective, for me, an asset needs to pay you monthly, not only when you sell it and realize the gain. Does that make sense?
100%.
Yeah. So, I remember him saying something along the lines of that, where the American dream was created by banks in order to sell you something, which makes sense, maybe not.
Let's be realistic. The American dream was marketing.
Exactly.
And it still is, right? Or whatever. A lot of the stuff is marketing.
Yeah.
Oh, invest in mutual funds. They return 7% a year. That's marketing.
Yeah.
And give your money to CIBC for whatever. It's marketing.
Yeah. Give your money to CIBC to some guy that just got out of university that has no real life experience and has less money than you. I don't understand.
He takes the bus to work or whatever the case is.
I don't understand that whole mentality. I have a really hard time. I would never go to a coach, a fitness coach, diet coach, nutrition coach, whatever, that was in worse shape than I was, or has never shown me that they could be in better shape than I want to be, or at least in the shape that I want to be. It's the same shit.
So true.
I don't understand that. You would never go to a trainer.
You know what I also wouldn't do?
That was worse off than you.
You know what I also wouldn't do? I wouldn't go to somebody that's in the same position as me.
Exactly.
Right? And this is a great analogy, right? If I'm in the middle class, right? I'm earning my wage. I want to get to that next level. Am I going to go talk to my coworker?
Yeah.
Unless he's, on that path or like at a certain level and he just happens to work there. No. Yeah. I'm going to somebody that's way ahead. Now, what's interesting is like let's take Coachwood, for example. I'll talk to my parents or some friends, family, my sphere, whatever. And a lot of people will be like, well, I don't feel comfortable. I don't know this guy that personally, or I don't, whatever. And then it's like, well, Dan has built 10 different businesses. He has a net worth of X amount. He owns 250 doors. He's done this, that, whatever, blah, blah, blah. Oh, I don't feel comfortable. Then they go to CIBC and give it to the 23-year-old kid just out of school to earn 3% and pay the bank 3% fee to even manage it.
Yeah.
And it's like, you don't get it, man.
Yeah.
Like, you don't get it. The pedigree is, obviously you still want to do some due diligence on whoever you're investing with, but the pedigree is 90% of it.
Yeah.
And it's just like, if I was to buy a stock, I'd be like, hey, I'm going to bet on guys like Jeff Bezos, Elon Musk. Like, they have a history, a proven track record of being successful. I'm not going to listen to the talking head on CNN or CNBC. Like, I'm going to bet my money on these guys. Yeah. And it's the same kind of thing. Like, which personal trainer are you going to bet on? Which money management guy are you going to bet on? Which real estate investor are you going to bet on?
Yeah.
Not the guy that's at the same level as you or lower.
Super weird.
Super weird.
Yeah. Something else I want to talk about that I see a lot on Twitter actually is the hate for realtors. especially right now.
It's insane.
So let's clear the air of the sentiment that we have as investors first. So my sentiment is I started during the Great Recession, and yes, although we're in Canada, we're in Windsor, Ontario, and when the Great Recession was going on, it took down the automotive industry, and the automotive industry, or the Windsor, Ontario was heavily reliant on the automotive industry, and it completely devastated the local economy here. So Windsor was very much affected by the automotive industry, very much. So a lot of people don't actually realize that, because I've brought that up in arguments and people refute it saying, well, that doesn't say much about your experience because Canada was not that greatly affected by the Great Recession. But again, real estate is very local, hyper-local even. And yes, Windsor was heavily affected because of the lack of diversification.
Yeah, 70-80% of our economy or something was probably
crazy.
Automotive.
So for me, coming from that type of environment and starting from that type of environment, I've always had the consensus of a cautious what am I trying to say here? A cautiously optimistic investor. I've always been a cautiously optimistic investor throughout even the bullish point in time 4 years ago. 5 years ago, I've always been cautiously optimistic because even when shit was very bad, I was always under the impression that, hey, listen, I remember when, I remember the Great Recession. When things were really good, I remember the Great Recession coming from that era. I remember the ghost town that I started in, and it was you had to be very careful for what you were buying. Very, very careful. Whereas the last 5-10 years, you can buy stuff in the worst locations in the city and look like a genius. But that doesn't happen anymore. That's not happening anymore either right now, I feel. So for me, am I still a buyer in today's market? Yes. What do I buy in today's market? I buy anything that makes sense, that matches my criteria for rates of return that I require, being I want to see 7% cash-on-cash return, and I'd like to see in between 20 to 25% total rate of return, or annualized rate of return, call it on an average of, say 5 years. So that's my criteria. If I could hit that, I'm a buyer.
Let me ask you this.
Yeah.
Right now, there's quite a bit of fear out there. Let's say you're presented with an opportunity, whether locally or abroad, whatever, it doesn't matter. It hits those criteria.
Yeah.
You do your research on the submarket. The submarket, you like the submarket. Jobs are growing, population, all this. The debt works. You can lock it in for whatever period of time.
Yeah.
You like the location. Do you pull the trigger?
Yes, of course.
It's in your budget.
And I already did.
What about macro?
Yeah, I don't. The problem is with macro, you can't predict macro.
That's the point.
You could look at it. I think it's prudent to consider it, but there's no way you're going to control it.
The question was not do you consider macro, it's do you pull the trigger on that deal?
No. Or based on macro?
No. Do you pull the trigger on that deal despite macro? Right?
Of course.
Yeah. Now, I'm not saying you're not aware of macro.
Yeah.
We're more aware than anybody. We'll look at this stuff every day, all day. We love it.
I'll give you an example. So I put out a post on Instagram and TikTok, whatever, and it was about the household income versus household debt versus income in Canada versus the U.S. Canada is at like 180% right now. The U.S. is at like something like, I don't even know, 130%, 140%. It's considerably less in terms of the ratio even to housing values, right? If anything, if I had to just guess, I would say Canada is in worse shape than the U.S. from a household perspective. That's a macro number, right? Do I consider that? Sure. What is that? Where does that shift? Where do I take that and apply it? Well, maybe I don't focus on Canada anymore. I focus on the U.S. Because of the strength of the U.S. in comparison to Canada from a macro perspective. But that's it. I'm not trying to say that I still wouldn't buy something in Canada. The problem with Canada is that nothing meets my criteria anymore for investing and my criteria for rates of return. So I'm not doing anything here until I actually see that. That is it.
Yeah. So you're looking at that number and saying, hey, you know what? Actually, Canadians are a little bit more over-leveraged as a whole than the U.S. Now, that doesn't isolate for city and price point of each particular city. But in general, hey, you know what? I might tilt my search more towards the U.S. right now because Canada as a whole is a little bit more shaky.
For sure.
Now, that doesn't say that this particular submarket in Canada or this particular submarket is overvalued or whatever. But I get your point.
Yeah.
It guides you to where to invest. But it doesn't keep you on the sidelines in a constant state of fear.
No, because the opportunity cost of inactivity is far too great right now. It's just far too great. Life's way too short to be inactive.
For so many reasons. Number one, experience gained operating in all markets at all times. Number two, and most importantly, inflation.
Yeah. Like you have to understand, and I know a lot of people are gonna disagree with this notion, but I've made a lot of big moves based off of this right here. Literally investing based on the fact that you can actually obtain a property or even get your hands on a quality piece of real estate when you otherwise may not have been able to, because there would have been fucking 10, 20 offers and it would have gone over market. So the best thing that you can do, this is how I approach real estate right now. The way that I approach it is, if it meets my rates of return, for example, if I see 5 to 7% cash on cash return expressed as an average over 5 years, and if I see an annualized rate of return of around 20 to 25%, I'm a buyer, right? But what I do is I then build in some risk to that. If there's a lot of fear and confusion in the market, for example, we have an announcement coming out next week from the Bank of Canada whether or not they're going to raise rates, correct? So what are they? What's the narrative out there that they're going to be increasing by? Like, what have you heard?
Point.
Okay, a quarter point. If I'm doing a deal right now, if I have a deal come across my desk right now, and I have to underwrite it with rates, obviously according to a rate, and say the rates right now are, say, 7%. Okay, what I'm going to do is I'm not going to use 7%. I'm going to use 7.25. And if it works at 7.25. Based off of a 50% chance of next week, that rate going to 7.25, then it works for me. That's what I'm talking about, building in risk into the deal, right? Because I don't know what's going to happen next week, but what I'm going to do is I'm going to build in risk. Whereas before, the interest rates weren't so volatile. We weren't having announcements nonstop, and we didn't really know the direction of the announcements. So in order to build in risk to your underwriting, assume the worst. And if it still works, assuming the worst case scenario, which is an increase, well, then it works and you're a buyer. Mm-hmm. And that's it.
Yeah, and that's a true investor. That's what an investor does.
You have to.
Yeah, but I think people get mixed up with the terms investor and speculator.
Exactly.
It's very different, right?
Yeah.
If
I'm
you're
not trying to speculate. I'm building in
I'm
risk.
speculating that they're not going to raise rates next week.
Exactly. I'm building in risk for the unknown because I don't know
Keyword.
what's going to happen.
Unknown.
Exactly.
Unknown. There's like an old, like, I don't know if it's Greek mythology or something, but like, or Socrates or whatever. He tries to find the smartest man in the world, and then he finally says in the end, he's like, I finally realized that I'm the smartest man in the world because I know that I don't know anything.
Interesting.
So I'm actually smarter than everybody else because everybody else thinks they know everything. They think they know this. They think they know that. I know that I don't know. Therefore, I'm smarter than them.
Interesting. That guy's going to learn at a much faster rate.
Yeah. Well, he's dead now.
You know what I mean?
Yeah. So it's so true. And like the more and more I go through life, the more and more I realize I don't know shit.
Yeah.
And the more I realize I don't know shit, the more it just allows you to kind of deal with things.
For sure.
It allows you to operate in difficult times. It allows you to like build in risk and just know that you don't know.
Yeah.
But when you think you know, there's two different things that happen. Either you stay on the sidelines forever because there's always so much fear, or you also think you know the market's going up. They're not going to raise rates anymore. I'm going to go not build in the risk and pull the trigger, right? Exactly. So you either don't do anything or you do stupid things.
Yeah, exactly.
But the true investor is just operating logically, building in risk appropriately, and knowing that they don't know
exactly
where it's going. Now, what I do think you can say is that in 20 years, at an average rate of 2% inflation, which because we're in a broken monetary system, they have to print more money. It's just the way it is. You can say with some pretty good likelihood that prices will rise over that period of time.
Yeah.
But we're not buying on price appreciation.
No.
We're buying on cash flow and debt service, and all building in all these factors into the model to see if it works. But
it's funny, maybe we'll leave on that on the notion of the conversation with that economist. That fucking guy makes probably over $250,000 a year, and you got these guys, that are not economists, have no formal training, that think that they can read like long wave fucking macroeconomic shit. But you got this guy,
insane.
You know what I'm saying?
Insane.
But you got this guy that's like literally paid by the largest institutions in the countries, literally telling me that he don't know shit, right? And nobody knows shit.
Yeah.
And everybody that he talks to doesn't know anything.
Yeah.
And he can't even tell me as a large banking customer anything.
Yeah.
He literally can't tell me anything. You know what? You know where the conversation ended? Here's some links to some stuff that me and my buddies and colleagues or whatever wrote up.
In 2 weeks, it's going to be outdated.
Or exactly. Or like here's these links. Interpret it however you want. That's
Smart
it.
guy.
That's how it landed.
Smart guy.
Because he can't. Now, don't get me wrong. He doesn't want to put the bank on the hook telling me some shit, right? But at the end of the day, it was a candid conversation, and he can't forecast anything. Like, he could put his best guess forward, and that's it.
Contrast that with some random people on Twitter.
It's crazy that are anonymous.
It's absolute certainty that X, Y, and Z is going to happen. It is without doubt. There is no way it's not going to happen.
Yeah.
It's imminent. It's always imminent. Yeah. But with no particular date.
Yeah. And for us, I'm not sitting here trying to say like shit's not going to happen.
Right.
That's not what I'm saying. Like I don't like you're not saying that.
Right.
I don't ever see you saying that. Our sentiment is simply that we're bullish on real estate long term. That is it. And we're still buyers if things work now because we don't know what's going to happen in the near future.
Yeah. We're bullish.
What happens if, like, okay, we have friends that have been sitting on the sidelines for fucking 15 years. They got one property to my fucking hundreds of doors. Like, it doesn't make any sense to actually sit on the sidelines. And at the end of the day, too, your loss is only realized when, what? You sell. So it is what it is.
Yeah. I love what you said about when the market was hot, the opportunity to get in some of these deals was off the table.
It was.
And now that, like, we're in kind of an in-between period. It's not super hot, but it's not crashed.
Yeah.
But you're in a period where it's like, hey, I'm the only offer on this property.
Yeah.
Hey, these big players are kind of on the sidelines, or these whatever.
Yeah.
And I could actually buy this waterfront property, paddleboard in Florida, like for 12 townhomes that cash flow at this rate. Like, if this was March 2022, like, there's 10 offers here, and it goes for prices that don't make sense with my model.
Yeah.
And now I have the opportunity to buy it. I have an opportunity
to buy them at the rates of return that meet my criteria.
Yes.
That's key. That's what we're saying we buy.
Built, yes.
And the reason why I'm a buyer at those criterias is because in the event the market does shift downward, I'm covered. That's what we're trying to say. It's not, hey, we're just going to buy stupid and buy whatever because we're just simply bullish on real estate. No, we buy based off of these specific criterias because in the event there is a downturn, it covers our ass.
Yes.
That's why.
You're covering your downside risk with the fundamentals. But what you're not saying, and none of us ever say this, we're always optimistic and positive, cautiously, of course.
Yeah.
But what we're saying is this asset makes sense now. We built in the risk. I can't tell you where the next 12 to 18 months are going, right? It could go this way. The market could crash or it could slightly start ticking up. We're not sure how it's going to play out. Long term, we're very bullish on this property because of these fundamentals. We don't know, but the numbers tell us that this is the right opportunity and the risk is built in.
Yeah.
Pretty simple.
Yeah, 100%. Yeah. Okay. Did we get into, I don't think we touched into why people are hating so much on
realtors.
On realtors. Yeah. We kind of started, we started there, but what's the sentiment? Do you think it's justified? Because I see some stupid shit out there, I got to be honest. But now here's the deal. I see some stupid shit, but it's obviously cherry picked, right? There's some dumbass people out there, doing some dumb, weird shit.
Ridiculous stuff.
Really weird, stupid shit. Telling people to, buy pre-con, and obviously they're obviously they have a biased opinion because they're selling the property or whatever. But that's that's not. I don't know how I feel about it because to some extent, you have to have some sort of accountability as a buyer, right? If you, I mean, what's your take on that? I mean, should they be, I guess, less optimistic in certain times like this, or are they doing their job, doing whatever it takes to sell property because that's their job, right? Like, if protein wasn't the best thing for you, but I make protein, am I supposed to tell you not to buy it? Like, I don't know what, you know what I'm trying to say? I think, look, man, right? Real estate agents, it's a low barrier to entry job, so it's going to attract people that, they don't have any experience, they don't have any real world experience, they don't have any investment experience. Those people shouldn't be popping off about investment properties, right? And they might be eternally optimistic and you shouldn't listen to them. But to paint all agents with the same brush is silly. But as an agent, I'm not a salesman, right? If you're a good agent, you're not a salesman, you're an advisor. Hey, here's a pre-construction condo. It's downtown Toronto. It doesn't cash flow. It's very risky for you to purchase this. Do I think long term? Yeah, we have 1 million immigrants coming in into Toronto over the next decade. Is it probably going to push prices up higher? Yeah. Like, would I buy this? No. But here's all the information. You make your own decision. Yeah.
Here's the comparable sales. I think it's worth X amount today. You make your own decision. I would never come out and just blast somebody with, you should buy this opportunity.
Yeah.
I present information, I guide, and I help you make educated decisions. So the client should be accountable. But some people, I could also manipulate people if I wanted to as well. I could say, oh, it's a great deal, and maybe an inexperienced investor will be like, oh, my agent said it's a good deal, I trust him.
Yeah.
And even though they shouldn't, they go out and buy the opportunity. So I understand that there's a lot of bad stuff out there, but you shouldn't be working with those people.
Yeah.
So I don't care about that guy on Twitter, because if I was a consumer, I'd look at that guy and be like, that guy's an idiot. I'm not.
Yeah.
Let me find somebody that refers me to somebody that whatever. So
had a good experience.
Just like lawyers or doctors or teachers, there's some really crappy ones and there's some amazing ones.
Yeah.
And there's some people that do sketchy things and defraud people, and there's some amazing lawyers and there's some amazing doctors and lazy doctors, but people are basically judging a whole industry off of the worst apples, and there's more bad apples because the barrier to entry is so low. It's
weird because I've been in real estate for a long period of time, and I've never seen, I actually think it has to do with the earning potential of good realtors as well, that people are just jealous, right? Because values of real estate are going up. People are blaming agents for it.
That's a good point.
And I think that it's a jealousy thing as well, where people feel like agents are making too much money, which I understand. I can see the argument there, but it's a shitty argument because jealousy is toxic.
Well, here's the thing too: the average agent doesn't make that much money.
Exactly.
Just like the top of any industry.
Yeah.
They're the ones that make all the money.
Yeah.
The average makes an average wage, and then the below average end up going out of business.
Yeah.
Just like everything else.
Yeah.
Unless you're an employee.
Yeah.
Right, or you're capped.
Yeah. I think that it has a lot to do with that because I don't remember the whole, because I hear it every once in a while. This fucking agent, this and that, making all this much money and this and that, and I don't remember. This was not the case back in the day around here for sure. And
no, you're right. You're right.
You know what I'm saying? Yeah. It was not the case. So I think it has a lot to do with like a jealousy thing. And,
You're also right about the misplaced blame. Well, the agents are listing the properties low. They're to blame for rising prices. It's just absolute stupidity.
People are going to buy it for whatever it's worth, and that's it. If that person thinks it's worth X amount of dollars, they set the market. That's it.
When the real problem is there's 10 people bidding on one house.
Yeah.
You don't call your MP and say, hey, fix the housing crisis. You blame the agent.
Yeah. Yeah.
Who's working for their seller and literally doing their job.
Exactly.
And presenting a property to market and allowing a free market to operate as it sees fit without manipulating anybody. You're just presenting it to market.
Yeah.
You're going to blame the agent because you're stupid.
Yeah.
Or you're uninformed and you don't understand how the market works.
Yeah.
And then it filters through to maybe jealousy and blame. Those are good reasons.
I think so.
And there's also some justified reasons, right? A lot of people have had bad experiences with teachers, lawyers, doctors, nurses, business owners, realtors.
Yeah.
And then you paint a whole industry. Oh, doctors are overpaid. They're lazy. I waited in the waiting room for 45 minutes. They don't care. They're on break.
Yeah.
Whatever, right? It's the same thing.
Yeah.
Tune out the noise.
Interesting. Okay. I think that's good.